Most people think XRP is just about faster payments, a cheaper, quicker way to send money across borders. For years, that's been the story Ripple told the world. But what if that was just the cover story? What if the race to replace Swift was just phase one of a much, much bigger plan? Now, a key CEO from the heart of regulated finance has gone on the record, revealing the strategy he's betting on. It's a plan that has less to do with payments as you know them and everything to do with rebuilding the entire global financial system from the ground up. It's about becoming the foundational layer for a tokenized world. This isn't just speculation from some random account on X. This is the inside story of how Ripple's calculated moves, its strategic acquisitions, and its hand-picked team of financial vets are quietly setting the stage for XRP to dominate a new financial architecture worth trillions. The dots are all there, hiding in plain sight. In this video, we're going to connect them. Before we understand where we're going, you have to get just how broken today's system is. The global financial system, for all its shiny skyscrapers and digital trading screens, runs on plumbing that was designed in the 1970s. It's slow, it's expensive, and it's shockingly clunky. When you buy a stock, do you own it instantly? No. It takes 2 days, a process called T+2 settlement. For 2 whole days, your money and the stock are in limbo, exposed to risk. Why? Because the system is a tangled mess of middlemen, each with their own hours, their own fees, and their own separate books. Now, imagine trying to send large sums of money across borders. It's even worse. Your money has to hop between a series of correspondent banks using pre-funded accounts called Nostro and Vostro accounts. Think of it like a chain of lily pads across a pond. Each bank has to keep a pile of cash sitting in another bank, in another country, just waiting for a transaction. This traps trillions of dollars of capital worldwide, dead money that could be invested somewhere productive. It's why a simple wire transfer can take 3 to 5 business days and cost a fortune. This system wasn't just built for an analog world, it was built for a pre-internet world, and now it's buckling under the pressure of a 24/7 global economy. But the biggest problem is what this system can't do. Think about the most valuable assets on earth: real estate, private equity, fine art, corporate debt. These are worth hundreds of trillions of dollars, but they're profoundly illiquid. You can't just sell a 1% stake in the Empire State Building on a Friday night. You can't instantly trade a piece of a private pre-IPO company. This massive ocean of value is locked up, inaccessible to most people, and a nightmare to transfer. This is the core problem. The existing financial rails are too slow, too expensive, and too fragmented for what's coming next. A future where every single asset, from a government bond to a royalty stream from a song, can be digitally represented and traded instantly. This future is called tokenization, and it demands a completely new foundation, one the old world simply can't provide. So, how do you replace a system that's been dug in for half a century and is defended by the most powerful institutions in the world? You don't attack it head on. You get invited inside the castle walls first. This is where the payments narrative was so brilliant. For the last decade, Ripple has been laser focused on solving one specific, undeniable problem: cross border payments. They went directly to banks, regulators, and financial institutions and said, "Your system is broken. We have a technology, the XRP ledger, and a bridge asset, XRP, that can settle transactions in 3 to 5 seconds for a fraction of a penny. Let us help you fix it." And it wasn't a lie. The technology does exactly that. Through products like RippleNet and what was then called on-demand liquidity, Ripple built a network spanning hundreds of institutions across the globe. They spent years in the trenches, working with regulators, mastering compliance, and proving that their tech was not just fast and cheap, but reliable and secure enough for the big leagues. Every partnership, every central bank pilot, every new payment corridor served 2 purposes. First, the stated goal: grab market share in the multi-trillion-dollar cross-border payments industry. But the second, more subtle purpose was to lay the groundwork for something far bigger: It was about building relationships. It was about gaining the trust of the very entities that control the global flow of money. Think of it as a Trojan horse. The focus on payments was the gift that got Ripple and XRP inside the gates of traditional finance. While the world was debating if XRP could beat Swift, Ripple was quietly installing the rails, integrating its technology, and establishing a global footprint. They were learning the language of compliance and hiring executives from Wall Street and government, positioning themselves not as a disruptive threat, but as a collaborative partner. The payments use case was the perfect entry point. It was easy to understand and solved a universal problem. But it was never the end game. It was step one. Get a seat at the table and install the operating system before launching the revolutionary software that would run on top of it. Payments got them in the door. Tokenization is the reason they wanted to be in the room. For years, the idea of XRP's role beyond payments was mostly debated within the crypto community, often dismissed as hype. But then, the whispers started coming from inside the establishment itself. Enter Graham Rodford, the CEO of Archax, the UK's first regulated digital asset exchange and custodian. This isn't a crypto influencer. This is a man who operates at the intersection of traditional finance and digital assets under the watch of the Financial Conduct Authority. So when Rodford went on the record about his strategy, people listened. He didn't talk about XRP's price. He talked about its function. He declared that we have hit the tipping point for mainstream adoption of digital assets for real-world use cases. He explained that financial institutions are finally understanding the power of tokenization, and he announced that Archax would be bringing hundreds of millions of dollars of real-world assets onto the XRP ledger. Let that sink in. A CEO whose entire business is built on providing regulated, institutional-grade access to digital assets looked at the landscape and made a massive commitment to the XRP ledger as the rails for tokenized securities, debt instruments, and funds. This was the moment the secret plan started to look less like a secret and more like a public strategy. Rodford essentially confirmed what many have long suspected. Ripple's true purpose isn't just to move money, it's to move value in all its forms. He sees the XRPL not as a PayPal competitor, but as the infrastructure for the high-speed settlement of tokenized assets. His perspective transforms the entire narrative. The years spent building payment rails weren't just about payments. They were about creating a global liquidity network. The fight for regulatory clarity wasn't just about selling XRP. It was about getting the green light for institutions to use the XRP ledger for regulated, tokenized securities. Graham Rodford didn't just announce a partnership. He pulled back the curtain on the institutional blueprint. Once you understand that the end goal is tokenization, Ripple's corporate strategy snaps into perfect focus. Every move, every acquisition, every hire has been a deliberate step toward building a full-stack infrastructure for this new economy. It's not a random collection of projects. It's the systematic assembly of a machine. Let's connect the dots. First, the acquisition spree focused on one critical piece: custody. For a bank or an asset manager to hold a tokenized asset, they need a qualified custodian, a highly regulated entity that can securely store digital assets. Ripple knew this, so they went out and bought Medico and through them, standard custody. This wasn't just about adding tech. It was about acquiring the keys to the institutional kingdom. Without secure, regulated custody, the tokenization market is dead on arrival for big money. Ripple now owns the vault. Next, you have the prime brokerage play. This is the institutional on-ramp, the plumbing that allows a hedge fund in New York to seamlessly trade tokenized assets with a sovereign wealth fund in Singapore. A prime broker provides essential services like clearing, settlement, and financing. Building out these services is a critical next step, creating a one-stop shop for institutions to enter the world of digital assets. By moving into this space, Ripple isn't just building a bridge. They're aiming to own the entire highway and the toll booths. Then there's the regulatory chess game. No institution will touch this without clear rules. Ripple's long, expensive legal battle with the SEC, which resulted in the landmark ruling that XRP itself is not a security in secondary sales, was fundamentally about this. That clarity was the crack in the dam. But Ripple is playing a longer game. For years, they've been working toward a national trust bank charter from the Office of the Comptroller of the Currency, OCC. In late 2025, reports confirmed they had received conditional approval for this charter. This is the ultimate catalyst. It would grant Ripple direct access to the Federal Reserve systems, place it under the highest level of U.S. regulatory scrutiny, and give it the unequivocal stamp of approval institutions demand. It transforms Ripple from a fintech company into a trusted piece of the core financial infrastructure. Finally, there's RLUSD. Launched in 2024, Ripple's own stablecoin quickly grew to a market capitalization exceeding $1 billion. This wasn't just an attempt to compete with Tether or Circle. RLUSD is a masterstroke. In a tokenized economy built on the XRP ledger, you need a stable, reliable, on-chain representation of cash. When you sell your tokenized share of real estate, what do you get paid in? RLUSD. It's the dollar leg of every transaction, a native, fully backed asset designed to settle instantly on the same ledger as the tokenized securities it's traded against. Look at the pieces: secure custody to hold assets, prime brokerage services to trade them, a relentless pursuit of the highest levels of regulatory clarity, including a bank charter to provide trust, and a native dollar-backed stablecoin to serve as the cash component. This is not a payments company. This is the deliberate construction of an end-to-end ecosystem for the tokenization of all value. So what does this all look like in the real world? This isn't theoretical. The tokenization of real-world assets, or RWAs, is already happening, and the XRP ledger is positioning itself at the center of it all. Let's start with the sheer scale of the opportunity. The Boston Consulting Group projects that the market for tokenized assets will hit a staggering $16 trillion by 2030. That's not a typo. $16 trillion. That is arguably the largest single wealth creation event of our generation. And Ripple isn't waiting around. Their partnership with Archax, the regulated UK digital asset exchange, is making it happen right now. Archax is actively working to tokenize hundreds of millions of dollars worth of real-world assets and bring them onto the XRP ledger, with a goal of over $1 billion in RWAs on-chain by mid-2026. What kinds of assets? How about the bedrock of the global financial system? U.S. Treasury bills. Thanks to projects like Open Eden, these are now available as tokenized assets on the XRP ledger. This means someone anywhere in the world can potentially hold a digital representation of a U.S. government bond, earning yield and settling transactions in seconds, not days. This is where the unique properties of the XRPL shine. Imagine an institution wants to sell a tokenized T-bill and receive RLUSD. On the XRP ledger, this happens as a single atomic settlement. The T-bill token and the RLUSD token are exchanged simultaneously in 3 seconds. There's no T+2 settlement risk, no counterparty risk, and no need for trapped capital. XRP itself acts as the low-cost gas to power these transactions and, critically, as the on-demand bridge asset. If a fund in Japan wants to buy a tokenized US asset from a seller in Germany, they don't have to deal with the friction of the euro to yen currency corridor. The transaction can be settled using XRP as the intermediary bridge in seconds. This is the utility that institutional players are betting on. The proof isn't in price charts. It's in the real-world use cases being built as we speak. If you're connecting these dots with me and seeing this bigger picture emerge, do me a favor and hit that like button. It's just one click for you, but it tells the algorithm that this is the kind of deep dive analysis people want to see, and it helps get this information out there. Go ahead, I'll wait. Done? Awesome! Let's get back to it. So let's zoom out. What does the world actually look like if this plan succeeds? Picture a world where your real estate is as liquid as your stocks. Instead of a single deed to your house, you hold a series of tokens representing its value. Need some cash for an emergency? You can sell 10% of your house on a Saturday afternoon, with the funds hitting your account in seconds. Imagine a world where startups and small businesses can raise capital from their own communities. They can tokenize a percentage of their future revenue and sell it directly to their customers, who now have a real stake in their success. Think of artists and creators. Instead of relying on complex royalty systems that pay out months late, they could tokenize the rights to their next album. Fans could buy a piece of the project, providing the upfront funding, and then automatically receive a micropayment in RLUSD every single time the song is streamed, settled instantly on the XRP ledger. In this future, the stock market doesn't close at 4 p.m. The market for everything, bonds, real estate, private equity, is open 24/7, 365, accessible to anyone with an internet connection. The barriers that have kept average people out of the best performing asset classes for decades begin to crumble, and underpinning it all is a decentralized open source technology like the XRP ledger, with XRP serving as the neutral bridge asset to connect all of it. It's the protocol for value, just like TCP/IP is the protocol for information on the internet. It doesn't pick winners. It just provides the rails for value to move instantly and cheaply. This isn't science fiction. Every piece of technology required for this future exists today. The only barriers have been regulatory uncertainty and the lack of institutional grade infrastructure. And as we've seen, those are the exact two barriers Ripple has been methodically dismantling, piece by strategic piece, for the last 10 years. Now, to be clear, this future isn't guaranteed. Building a new foundation for global finance is a monumental task, and Ripple faces huge risks and fierce competition. First, there's the long-standing critique of centralization. Critics argue that Ripple's large holdings of XRP give it too much influence. While the company has placed the majority of its XRP in a cryptographically secured escrow with a predictable release schedule, the concern remains a key point of debate. Second is volatility. For an asset to be a reliable settlement tool for trillions of dollars, stability is key. XRP has a history of major price swings, which could be a risk for institutions needing predictable costs. The growth of stablecoins like RLUSD on the ledger helps a lot, but XRP's own stability as a bridge asset is still a factor to watch. Then there's the giant hurdle of regulation. While Ripple has gained significant clarity in the US, the global regulatory landscape is a complex patchwork. Getting approval jurisdiction by jurisdiction is a slow, expensive process, and a single bad ruling in a major market could create serious setbacks. Finally, Ripple is not alone. The tokenization of real-world assets is the biggest trend in crypto, and everyone wants a piece of the $16 trillion prize. Ethereum, with its vast developer network and Layer 2 scaling solutions, is a formidable competitor. Other blockchains are also being built specifically for RWAs. The race to become the institutional settlement layer of choice is on, and the outcome is far from certain. This is not a guaranteed win. So is XRP just for payments? After connecting the dots, the evidence overwhelmingly suggests that was never the whole story. It was the first chapter in a much larger book, the opening move in a decade-long chess match. Ripple isn't just building a payment rail, it's meticulously assembling a full-stack financial infrastructure for a tokenized world. The acquisitions of custody services, the move into prime brokerage, the pursuit of a national bank charter, and the launch of a native stablecoin are not isolated events. They are the calculated actions of a company that sees the future of finance not in just moving currencies faster, but in tokenizing every asset of value and letting them move as freely as information on the internet. A regulated financial CEO saw this blueprint and publicly committed to building on the XRP ledger. The world's largest asset managers are publishing reports on the coming tokenization wave. The question is no longer if our financial world will be tokenized, but what it will be built on. And Ripple has spent 10 years and billions of dollars to make sure the answer is the XRP ledger. What do you think? Is this the master plan for XRP? Is tokenization the true north for Ripple? Or is it just one part of the puzzle? Drop your thoughts in the comments below. I read every single one. And if you want to stay ahead of these massive financial shifts and understand the forces reshaping our world, make sure you subscribe and hit that notification bell. We're only just getting started.